Shixing Mao, a Chinese young man who, often bewildered by his excessive wealth, had earned his first 100 million by the age of 23 while still a graduate student. Having been in the industry for less than 2 years at that time, he now seems to achieve a new 15 million US dollars every few days. Money floods into his wallet like a torrential downpour, earning him the nickname Discus Fish in the crypto community. The reason behind this moniker is his ownership of the world's largest cryptocurrency mining pool, F2 Pool, which at one point accounted for a third of the global hashing power. He truly stands at the pinnacle of the crypto world, deeply involved in the development of the entire cryptocurrency industry. To him, the seemingly chaotic and unclear crypto market is like navigating a maze with Google Maps. He knows which paths lead to success, which are fraught with obstacles, and which will have you going in circles. Recently, he shared a thread on how to grow from $1,000 to $100 million, detailing strategies for each stage of capital growth that can minimize risk and rapidly accumulate wealth. His insights were enlightening, offering a practical and feasible roadmap to riches. I will now delve into a detailed interpretation of this, helping you identify your current stage and embark on the journey to financial freedom. Make sure to hit the subscribe button and stay tuned until the end, as this could very well save your wallet this year. The first stage involves entering the crypto sphere with capital ranging from $1,000 to $100,000. Discus Fish advises that at this stage, one should diligently pursue airdrops from core DeFi tracks and whitelist minting for popular NFT projects. Both methods carry very low risk but require a significant investment of time to gather information and conduct analysis to identify potential projects. At this stage, one should not consider trading in the secondary market but should focus on exploiting these two methods for profit. Execution must be strong to ensure stable and rapid capital accumulation. Many DeFi projects reward early supporters with airdrops, some of which can be worth over $10,000, such as the previous Uniswap airdrop. Participation in smart contracts of projects yet to issue their tokens can incur gas fees for each interaction, necessitating selective participation in high-value and high-certainty airdrop opportunities. Interacting with testnets of projects that haven't issued tokens only requires testnet ether, avoiding actual gas fees. Additionally, participating in on-chain voting for mainstream DeFi projects can have entry barriers requiring a certain amount of project tokens in advance. Whitelists for popular NFT projects allow early purchase at prices lower than the public sale. For instance, the Nobody project by the Stephen Chow, a pioneering Hong Kong filmmaker and actors team backed by Chow himself, attracted many followers from inside and outside the crypto community. The project, which received funding from OKX, maintained a high profile on OKX's NFT market banners due to its active community and marketing efforts. I also hosted a guessing game on the YouTube community tab where participants guessing the correct price were airdropped a whitelist spot. Participants could mint at 0.19527 ETH, with the price peaking at 1 ETH before stabilizing between 0.9 to 1 ETH for an extended period. Selling at these prices could quadruple the initial investment, exceeding $2,300 in value. If a rare image is minted, its value could range from several to dozens of ETH, potentially facilitating a significant wealth transition. Such luck can be increased by participating in more popular projects. Opportunities for whitelists and airdrops are plentiful across social platforms like YouTube, Twitter, Instagram, or community groups, with many projects distributing whitelists through activities or tasks. Some do not require personal investment for minting, while others only distribute the whitelist, leaving minting costs to the individual. The key is to seize every opportunity for profit and rapidly complete the initial accumulation. Once you've accumulated $100,000, you can move to the second stage, aiming for $1 million. In this phase, avoid leverage and contracts, focusing instead on new public chains and Layer 2 L2 solutions. Following the time machine investment principle, which suggests that the development logic across different countries and industries is similar but staggered, can help identify potential projects early on. This principle, proposed by Masayoshi Son of SoftBank Group, applies well to the crypto market, encouraging continuous tracking and innovation in similar ecosystems. New public chains are likened to newly built highways designed to offer more capacity, speed, and efficiency than early blockchains like Bitcoin and Ethereum, aiming to solve congestion and high transaction fees. L2 solutions acting as additional lanes or overpasses on these highways optimize the existing network to improve throughput and reduce congestion, enhancing user experience. Exploring these new platforms can sharpen your project research skills. Even if a token has already appreciated in value, don't hastily dismiss it. Evaluate the project's sector for its popularity and growth potential, looking for opportunities to enter the market at positions that align with your trading signals. Joining communities of investment experts can also provide valuable research insights, but always remain cautious and discerning. The journey from $1 million to $10 million requires a shift in mindset from valuing wealth in fiat currency to valuing it in cryptocurrencies, such as Bitcoin or Ethereum. The focus should be on increasing the quantity of coins through in-depth research and prudent trading, avoiding short selling. Utilizing low-leverage DeFi lending protocols can enhance capital efficiency. Platforms like DYDX, which offer token rewards for trading, are worth exploring. It's crucial to observe an arbitrage without the unrealistic expectation of participating in every trend or earning every possible penny. Securing a stable cash flow through arbitrage and staking is more important. Maintaining a calm and stable mindset is essential. After that, wealth growth depends on time and the industry's development. The final step involves progressing from $10 million to $1 billion. Holding core assets while avoiding significant losses, pursuing low-risk steady appreciation, and ensuring a healthy cash flow are paramount. Keeping a portion of assets in cryptocurrencies to not miss out on opportunities, having stable coin assets for liquidity to manage emergencies, and buying the dip during market downturns are strategic moves. Allocating 10 to 15% of assets to invest in promising sectors allows for engagement and prevents impulsive decisions. Avoid contracts and starting a business to minimize risks. Focus on reading, exercising, improving personal understanding, and prioritizing the well-being of oneself and family. Alright, don't forget to hit the subscribe button to stay updated with more profitable trading contents. Wishing everyone a swift and successful wealth transition. Goodbye.